Calculation of amount of depreciation under SLM, WDV and sum of the years digits method. I will confine with the SLM method here. And also I suppose to pass the journal entry for this illustration. Supposed to pass the journal entries also. Original value and scrap value is there and life is 4 years. But at the time of scrap value, means at the time of sale, sold for 10,000 rupees. Depreciable amount is equivalent to 65 minus 5. Yeah. Here I am going to guide you the past journal entry. 65 minus 5, 60,000 is the depreciable amount. Has a life of 4 years, then it can be amortized over the period of 4. Year after year, 15,000 rupees is going to be depreciated. Now pass the journal entry here. How do I account it? It's the matter here. The method of accounting is the matter here. 0th period, I purchase the asset. What is the journal entry for purchasing? Asset account debit to bank. Assume that the payment is made by way of bank. Value being 65,000. By the end of first year, I depreciate that 15,000 rupees here. Now come on, pass the journal entry for depreciation. Make it faster. Depreciation account debit to asset account. Value being 15,000, right? Year end, whatever the nominal account may be, should be transferable to where? Profit and loss account. So this depreciation should be transferable to P&L account. Yes, come on. Journal entry being transfer entry. P&L account debit to depreciation, transfer entry. The transfer entry here being 15,000. Now repeat this for the remaining 3 more years, right? Pass the journal entry for the second year. Come on. What's the entry for the depreciation for the second year? You can join with me in answering this and you can do it yourself also. Come on, make it faster. Depreciation account debit to asset account 15,000 and then this amount should be transferable to the P&L account, so profit and loss account debit to depreciation. The value being 15,000. And third year end, what happens? Again, we supposed to depreciate for the third year. The entry being depreciation account debit to asset account. The value being 15,000. Next, this depreciation should be debited to the P&L account. Am I right? So P&L account debit to depreciation. And fourth year end, what happens? Again, we have to create the depreciation. Not only that, that's the last year of the life. The asset sold for 10,000 rupees. So in the fourth year, again the depreciation value being the same 15,000 as it is being straight line method of depreciation to asset. The value being 15,000. This depreciation should be transferable to the P&L account, so profit and loss account debit to depreciation. This value being 15,000. The next will be, as it comes to the life end, no more the asset is useful, so it can be sold off the market. On selling it, it is sold for 10,000 rupees. As per this provision of depreciation, we came to know the value of the assets being only 5,000 rupees. But sold for 10,000 rupees means it gives me a profit at the time of sale, right? Come on, pass the journal entry for sale. You get the money, right? Bank account debit. How much I am getting? 10,000 to asset. The value of the asset here being 5,000 only. So as per the book value, it is 5,000. Sold for 10,000 means we get a profit of rupees 5,000. That profit should be credited in the profit and sale of the assets account, and later it will be transferred to the P&L account. Straight away you can name it as being P&L account in bracket profit and sale. In bracket profit and sale 5,000. So this is one method of accounting treatment. In this accounting treatment, the depreciation is reduced. The depreciation reduces the value of the assets. In another method, we are accumulating the depreciation in new account called provision for depreciation. Let me try to solve the same illustration under provision for depreciation model also, right? Finish up copying this, I will go for that method then.